one, figure out what they paid for it and what their loan looks like. So one thing I don't want to do is I don't want to waste time on a deal where there's no equity. And that's going to be a process, right? Even if the motivation is there, the lender's not going to right away just let you pay less for it, right? And take a hit. That's going to go through a whole process, and it's going to take a long time. So that's the first thing. We look and we see, okay, do they even have equity? Did they buy this at a decent basis where we can come in and work something out? And then if they do, the first thing we're asking is a seller carryback. Now's the time for it. And depending how motivated they are, you can get some pretty good terms on that seller carry. We've done it. We've got almost about 30 million right now in seller carry throughout our projects. And then from there, building that capital stack, right? And trying to see what else. Let's say seller carry is not there. Well, maybe bring in some private equity or JV equity. As long as you don't, I do not suggest doing a hard pref. Right? Then you create a whole other situation if you don't pay the pref equity. So a soft pref, and then your common equity.